Hello and welcome to Buy Africa, the show where we focus on investment opportunities around the continent. I'm Tshepho Modiba. Thanks for joining me. Tonight, I'm joined by Robert Omotunde, Head of Research at Afrinvest. Robert, thank you for joining us on the show.
Thank you. Good afternoon.
I figure we can just start off with the insurance sector in Nigeria. What really is the current landscape from an operational perspective? How is it structured? Is it very competitive? What's the nature of the insurance industry?
Well, in Nigeria, as we speak, the insurance sector is still majorly challenged because of the level of penetration into the market. Looking at the basic statistics, if you look at the penetration rate for Nigeria is currently at 0.3%. That's talking about gross premium to GDP. And if you compare that across comparables in the world, you see the average for Africa is like 3.6%. And then you look at the global average at about 6.5%. So definitely, and even South Africa is doing as much as 15%. So if you look at the penetration in Nigeria, is not as fantastic when you compare to what is obtainable in other countries of the world. But in terms of operational activities of the industry, we have an industry that is more or less fragmented, although you have some big players in the industry. For instance, if you talk about the top 10, the top 10 players in the industry account for close to 65%, of gross premium rating when you look at it on an annual basis. But the major challenge for the industry has been the level of understanding and the amount of insurance that these insurance companies are able to write. When you talk about the way Nigerians perceive insurance, the industry is such that the general practitioners, talk about those who are involved in general insurance, are the ones that are more or less playing a major role in the industry. But the major thing that is worthy of commendation is what the regulator has been doing in trying to increase the level of penetration in the industry. So we have a number of initiatives that have been put in place, one of which is the MDRI, which is the Market Development and Reconstruction Initiatives, which is meant to imbibe the culture of insurance in most Nigerians. So at the least, you have some compulsory insurance that are imposed, one of which is the third-party insurance, third-party vehicle insurance, in which case an individual is expected to pay at least 5,000 naira, which is the minimum for a third-party insurance. But one of the challenges that we've always had in this part of the world is that a lot of people still try to circumvent the process, and not wanting to pay the amount that is involved. They just want to get the papers to clear themselves when they are harassed by the security operatives. So these are some of the challenges that is facing the industry. So, but when we talk about the big ticket transactions that are taking place in the industry, they are majorly in the oil and gas, and of course the general insurance, which most people will want to practice. Very recently, we've seen some drives into auto insurance, talking about motor vehicles. We've seen a lot of people, mostly people within the middle class, trying to do comprehensive insurance as against the compulsory third-party insurance, which is mandatory for everyone to do. The industry is obviously challenged, and the players in the industry are trying to come up with ingenious products that can tend to attract a lot of people who are not buying insurance products to begin to key in this market. But definitely there's a long way to go in terms of penetration. When you see, for instance, in Africa, we have close to about $70 billion in gross premium received annually. And Nigeria being the biggest economy only makes up 1 billion out of the $70 billion dollars in gross premium rating, and which is why we have a low penetration of 0.3% compared to the rest of the countries in Africa. So no way, there's no way we want to look at it without saying that there's a long way to go.
What's driving the low penetration within the insurance sector?
Well, like I said earlier, the major factor is the level of enlightenment and understanding, and again, some of this can be also associated with the level of education of most people who are supposed to be buying insurance products. I just made example of the compulsory insurance, which is made mandatory. But even at that, we still have people who try to manipulate the system in order to ensure that they don't pay the 5,000 naira minimum, which they're supposed to do on insurance. It's against what you will see within the banking industry, where you could say that of the 170 million people in Nigeria, we can count as much as 70 million people who have bank accounts. The story is not the same for insurance in Nigeria. And again, you can also link it to the level of enlightenment. I mean, people would think generally that why should they buy an insurance product? What if the risk does not crystallize, and all of these things. So most of the attractions we've seen in the industry has been majorly driven by the middle class. Those are a little more enlightened. And of course, corporates who are playing majorly in the industry, because almost every corporate have a line of their business insured, or some of their assets or properties insured. So the corporates have always been the major driver of insurance products in Nigeria.
Robert,
but on the retail side, we still continue to see a lot of challenges, as I earlier pointed out.
Robert, does this low penetration then result in structurally higher premiums?
Well, I would not say the low penetration is as a result of high premium, because if you look at the premium, it's an industry that is highly competitive. I mentioned earlier the big players maybe make up about 65% of the market, but we have more than 100 insurance companies that are playing in Nigeria, and the competition is really stiff and high, to the extent that when you want to buy a product, there are a lot of competitive pricing out there, in the market. So I think to a very large extent, the premium rate is fair to the players in the industry. It is fair. So I wouldn't necessarily link the low penetration to low premium, because that some of these transactions that need to be picked up by most of these insurance companies are highly risky businesses, that they need to analyze the size of their balance sheet before they want to take up most of this risk.
Let's talk about one or two of the big players. Who is, I guess, the lead insurer in Nigeria?
Well, the leader is still Leadway, although it's a company that is not listed, that is not quoted on the Nigerian Stock Exchange. But they still have the leadership in terms of gross premium rating. We have other players in the industry who are listed, who are also leading, the likes of Aiko Pensions, Aiko Insurance Company. We have the likes of Mansard, that's AXA Mansard, and some other players in the industry who are taking the lead and are listed on the Nigerian Stock Exchange.
Let's talk about Aiko. What do they specialize in? Is it short-term insurance? Is it more focused on corporates, as you've touched on?
Well, for Aiko, they have a specialty in both life and non-life. So, like I mentioned earlier, the general insurance is still where most of the players are playing in the industry. We have few that are into the reinsurance business, but for Aiko, they play on both ends, life and non-life.
Okay. And what has made them gain the market share that they have? What makes them successful in the Nigerian environment?
Well, looking at the strategy of the company, like maybe in the light of what other competition that they have in the industry are also offering, I think the number of years for which they have existed in the country is a major success story. Looking at the fact that they've been around for quite a while. And they have a retail strategy also to penetrate the market, and again, they have a big balance sheet size that is capable of financing the big ticket transaction. Perhaps some of the issues that we have with most of these insurance companies in Nigeria is that they have very feeble balance sheet size. The reason being that we have a lot of fragmentation in the industry. We've always advocated for the need for merger, for M&A transactions to take place, in the industry, because there are some times that some of these insurance companies are not big enough to be able to finance some of the big ticket transactions, But for Aiko, yes, they've been relatively, their performance has been relatively fine when you compare to others in the industry.
Robert, how does Continental Re look like in the current environment?
Well, for Continental Reinsurance, they're in the reinsurance business, and most of other insurance companies, even those that are, whether you're for life or non-life, reinsurance is a major operational aspect of the insurance business. So we have an reinsurance rate that is slightly above 20% from the data, if you look at it as a 2015 full year. So to that extent, we have some of the players in the industry that are quite bullish in their reinsurance rates. Some do as high as 50%, 60% in reinsurance. So to that extent, Continental Reinsurance is able to leverage on that dynamic play in the industry to churn out its own numbers in the current challenging operating environment.
Perfect. Let's leave it there. Thanks to my guest, Robert Omotunde, Head of Research at Afrinvest.
Thank you.
That's all from Buy Africa this week. Remember to follow me on Twitter. That's @Modiba_Tshepho. And send us your thoughts about the show using the hashtag Buy Africa. From myself and the team, goodbye.